Welcome to How To with Mia and Ziad. We are thrilled to see you back here. If you aren't already, then go ahead and subscribe to us on our YouTube and follow all of our other social media channels. They're all under the handle Gerber Kawasaki. We'll be posting more on our TikTok as well. You can follow it at Markets with Mia.
Had to come back in the office for this one. We're talking about life insurance this week. It's one of the most important parts of your financial plan. A lot of what we talk about normally is the building blocks of your finances, but what life insurance is that umbrella that's there to help protect everything in case anything happens to you. So we wanted to take some time this week to talk over how much coverage you should be getting, what are the different kind of life insurance policies that you can get, and why it is so important to your situation.
Of course, nothing should be taken as personal advice. If you have questions about your specific situation, please go talk to your financial advisor, figure out the best options for you. And with that, let's get into it. So why is insurance important? Insurance provides financial compensation to your family members or beneficiaries in the event that you pass away. You want to make sure that your loved ones are protected even when you're not around. There's many different types of insurance, and each type definitely serves a different need.
So, how much coverage do you need? The general rule of thumb that we use is you want to have $250,000 in coverage per child, along with 4 times the amount of income, plus any debts that are on your books. That way, everything is protected from your debts to your dependents to everything beyond that. Is getting life insurance through work enough? No. Usually life insurance that's provided through your job doesn't cover everything that you need. On top of that, premiums do rise as you get older, as opposed to other policies that you can get on your own that allow you to lock in those premiums even as you age. Beyond that, if you leave your job, that life insurance policy doesn't stay with you, and so you're left hanging out to dry. So usually we recommend that you plan as if that work life insurance isn't even there. You set up your own personal life insurance policies, and that work insurance is then an added benefit on top of that.
Now, what is term insurance? Term insurance protects you for a specified period of time, so a term. It is a temporary insurance policy that can cover you for 1 year, 10 years, 30 years, or even up to a specific age like 65. The death benefit only gets paid if the insured dies during the coverage time period. So if I bought a 10-year term policy when I was 25 and passed away when I was 30, my death benefit would be paid out. If I made it to 35 alive and well, then no death benefit would be received. Unlike term insurance, whole life insurance combines the death benefit with a savings element. We call this the policy's cash surrender value. It increases each year the policy is kept. You can also borrow from the accumulated cash. The coverage for whole life begins the date of issue, and it continues until the insured date of death, as long as the premiums are paid on time. What is universal life insurance? Universal life provides flexibility. Similar to how universal remotes can be used for most TVs, a policy owner of a universal life policy can really make it their own. They can adjust their death benefits and premium payments. There's 2 main parts to universal life that are similar to whole life. 1 is the death protection, 2 is the cash value. The death protection is a 1-year renewable term insurance, and the policy owner can increase or decrease the death benefit during the policy term. The cash value will grow over time according to current interest rates.
With most insurance policies, you can purchase additional features on top of the coverage that you're receiving. These are called riders. Generally, you have to pay a slightly higher premium for these riders, but with that, you get these added benefits. A few examples of some common riders that are purchased with insurance policies are guaranteed insurability, family income riders, accelerated death rider, or long-term care riders. What a guaranteed insurability rider is the ability to apply for more coverage without having to go through additional medical examination. So if you're getting older and you're considered less healthy, you don't have to go through that extra underwriting process and potentially not qualify for that coverage that you need. Family income is, instead of getting a whole lump sum death benefit when you pass away, you're providing your family with a monthly income over a certain period of time. So that way they can better spread it out and manage through any kind of monthly expenses. The accelerated death rider is in the instance where you're diagnosed with a terminal illness. A really good example is, say you were diagnosed with cancer. Rather than having to wait to receive that coverage, you can access those funds from that insurance policy before you pass away and use that for a potential experimental surgery or treatment. While everyone's situation is different, we generally recommend that you only contribute 2 to 3% of your income towards your life insurance coverage. If someone's asking you to contribute a larger portion of your income towards life insurance, that's generally a red flag. As fiduciaries, it's our responsibility to only recommend that you contribute a small portion of your income towards life insurance rather than a majority. We cannot stress this enough. Most people like to focus on saving, investing, growing your wealth, but one of the essential parts to your financial plan is making sure that you have that proper life insurance coverage. If you are looking for a review of your plan and making sure that you are properly protected, please reach out to us. We're happy to sit down for a consultation. Make sure you have all your finances dedicated towards your goals.
Thanks for joining us for another episode of How To with Mia and Ziad. Of course, if you have any questions about this episode, you can DM us on any of our social media channels, or you can leave a comment on our YouTube page. We want to hear what you want to hear about, so please reach out to us and tell us what you want our next episode to be on. You can also give us a call at 310-441-9393, and we will see you all next week.
See you all next week.